It's Friday, May 3rd of 2024. Here you see our trades for today. Up top, we sold to open the OZK June 21st, $42.50 put options. You got 49 cents per share for that. So look at our charts here. Top right, we have our hourly, our 60-minute chart. We see this broke out above the red 200 and the green 50 moving average on this hourly chart. That looks good. Now, main charts are down here on the bottom. And kind of zoom in here on our daily chart at the bottom left here. So one thing I like about OZK, number one, I believe they're undervalued. Number two, it broke out above this area of resistance today. Volume is not high. Now right now it's, let's see, what time is it? 1:18 Eastern time. So we still have several hours before the market closes. So very well may come down. And let's see, did it make a gap? Let's see, the high here was 46.51, the low. Yep, so a little bit of a gap. So probably will get filled, maybe get filled today before the market closes. But overall, I like that it broke out above this resistance, and that usually means we're going to advance. But just in case, I went ahead and sold that put option down here. So right at the red 200 moving average on this daily chart. So we'll have to push through this area that should, if it holds, turn into support. Another area of support right in here from a couple of days ago, which is also the green 50 EMA, exponential moving average. And then we have the red 200 EMA, and then we have our 42.50 put option. So I like our position here, like the company, believe it's undervalued. And again, notice here on the weekly chart, nice long-term overall, bullish looking trading channel here. Been trading kind of consolidating this whole year so far, and now it appears to be ready to break out. Volume has been decreasing over the past several weeks, but still nice buying pressure over the past month and a half, 2 months. I believe we have a little more room to add to this, so we'll look to do that, especially if it were to come down some. I'm gonna come back to SPX because I want to discuss it when I get to this one down here. We'll go through these other two trades here. So VZ sold the July 19th, $36 put option, 42 cents. This is a position we've been building slowly. And with a down day today, at the point we did it, and still finding support, the red 200 moving average, I went ahead and finished it off. Just notice that we still have plenty of room here if it comes down. It can come down, what, about 7% before our July option is challenged. So overall, another company I like. It's right there at the cusp of it's trying to find support this green 50 moving average on this weekly chart, and it is. So far it is. But it looks like we're going to end the week on a pretty good down candle that was right at the low of last week, unless it really crashes in the last few hours of the day. But right now, I want to give ourselves some room. I want to be in a trade because I like Verizon. I think it is undervalued. Nice dividend-paying company, stable company, more like a utility, in my opinion. But we do see some weakness, but I'm okay with it being Verizon. I'm okay with it being this far out of the money. So that's Verizon. And then one of these orders we had sitting out there to buy to close, the RY May 17th, 95 put for 15 cents. So Royal Bank of Canada is supposed to announce earnings in May. So we want to close this out, so we don't got to roll it out. And this was down here at 95. We also have some $100 strike price cash put options that expire in May. We'll look to close those out too, but nice strong advance for the past 3 days. Gave us the opportunity to get out early. So real early, actually. See, what is this about? Well, about 2 weeks early. So early. Now moving on to SPX. So we're doing some more of these trades where maybe campaign style trades. We can do them no matter what's going on with the market, not really subject to earnings announcements or individual stock volatility. I like that. And we're building some of these, trying out some other ones, other accounts that I'll share with you guys once I make sure they're something that I think fits what we're doing here on Patreon. So with this one, so first of all, I'll address the one down here. So we bought 5 of the SPX August 15th, $2,800 put options. And you may recall that several weeks back, we sold 3 of the August 15th, $28.50 put options. So to turn that into a type of a black swan event hedge, we were waiting until these $2,800 put options, the price came down enough, so we basically got them for free. So the 28.50s that we sold them for enough to more than pay for these. And we also have, I think it's about 20 cents left that we can buy back those 28.50 put options that we sold, the 3 contracts, for 20 cents or less, then we're left with just these. So overall, we got this hedge for free, which we like that. And the next strong down day in the market, I'll look to do it again. Look to sell some more 3 times of the SPX options and look to buy, like we did today, 5 whenever we can buy those for no money out of pocket with a combined position. All right, and then SPX, this is another one of our little campaign trades. We're kind of planning to do these ongoingly as long as the market isn't absolutely getting crushed So what we did is we bought one of the SPX $4,900 puts, sold a put one 50 points below that, so the 48.50 strike price, and then to get our nice credit, we sold two of the real far the money August 30th $4,200 put options. So just a couple of things to keep in mind here. This is a really big trade. If the market were to have a serious implosion like it did in March of 2020, you got to have a plan for this. So our plan is we got $1,900, so basically $2,000. Our max loss is at, we're going to say, is at $4,000 or 2x this, so just under $4,000 if this position, if the market were to decline, have a big crash, and this gets to basically a $4,000 loss, we're out. No matter what, we're out. And our hedges are these little SPX hedges that we've been building over time. We'll continue to build those. So got a nice credit for this. Now our $4,200 strike price is way down here. So of course we're trading up here around 51.25. So almost 100, almost 1,000 points. So 20% out of the money, thereabouts, around 20% or so. So nice room for error. And if it were to get down here, be below 4,900, we have the potential for some nice profit since we own this debit spread here. The 4,900 long, the 48.50 short. It's a nice debit spread. And we really don't get in risk until we get close to that 4,200. But again, our stop loss, no exceptions, is if this position goes to a loss of almost just under $4,000 or 2x what we got, so 19.6 times 200, then we're out. All right, so I believe that covers everything. That's all of our trades for today and for this week. And if anything else gets filled, I'll just add it to the notes. This is all the trades I have planned for today, so the only other orders that might get filled are some we have sitting out there. And I believe Monday or Tuesday I'm going to look to buy some outright stock in our 10% account. I had some lined up this week, but decided to hold off till after the Fed announcement, and now decided with a big update today just to hang on, and we'll wait till next week. I'll reassess over the weekend, and we'll do some buys in our 10% outright stock ownership account next week. So that's all for today and for this week. I hope you have a great weekend.